bottom edge. Now, once we get this pull, we maybe take a bit of profit here. So you say, right, I'm going to bag some of my profits here, and you take a contract out. So you bought 2 in here, you take 1 out here. So what are you asking yourself? Where am I going to buy back in? And then you see this going, and you see this blue line peeling off, and you go, this is even better. I'm going to buy some more in here. And it goes above the top edge, and maybe you take 1 out. Maybe you don't take any out. And then it pulls back, and then it turns back around. And you say, oh, I'm going back in again. And then it goes into a green zone, and you're now very careful because you're in a pin zone. You get a decent pull back into an imbalance, and you say, you know what, I'm going to buy again in here. And then you start seeing it reaching the kind of levels that you know it's going to start topping out. And then the divergence comes in, and you say, right, that's it, all out, all out. No ifs, no buts, all out, not on a trailing stop, but on the way up. And all of a sudden, this one trade from 714s, all out at 756, you've made 40 points your money on that first entry, $800 profit. And all of a sudden, you've added 4 more times. And instead of $800 profit, you've ended up making something like $2,000 or $3,000 profit. And you go, now that is how I make money in the future. This is how I am going to do these types of trades going forward. If the value is still with me, if the narrative is still on my side, if the narrative is right, I am going to do this bit of business, and that's where I'm going to make my monies. You imagine, Reeve, for a second, if you had not the DVO1 knowledge from earlier on for that bond sale from the last 2 days. You'd have made your year's money on that move, wouldn't you? You'd have literally made your year's money on that move. If all you did, instead of taking profits, you can still take profits, but you never closed. All you did was held that short until we hit our target price. You would have made your year's money on that one move. And that's the difference. That's the difference. A lot of people will say, yeah, it's very kind of turtle-esque, isn't it? You make all your money in one big move. But that's not a big move in real terms. How many of these moves do we get a day on a 1 minute chart? Probably about 5, 6, 7, 8 of them on a 1 minute chart. Probably about that. So we're going to catch maybe 2 or 3 of them. And if those 2 or 3 trades, and then we scratch out a few other ones, those 2 or 3 trades have made me my week's money every time they happen, right? Every time they happen, I've made my week's money on these moves, and I might get 2 or 3 of them a day. Oh, that's crazy good stuff. Welcome in, guys. It's just after 1 o'clock. I did a classroom this morning on bonds for my sins. Yes, nobody wanted it, but I insisted that they listen to me anyway. I don't know if anybody appreciated the fact that they had to listen to me on bonds this morning, but, it is what it is. I'm not sure we'll do the classroom this afternoon unless anybody specifically thinks it had any value whatsoever. I know we don't have bond traders, but we do have equity traders. And on the back of the fact that we have equity traders, I think bonds are quite valuable. So that's why I did the classroom this morning. And as I said, we had a few question marks about whether I suppose that had any value, because it takes that extra leap away from the narrative, away from your immediate narrative into more of a background story. But because of that background story, I made one of our biggest gains this morning that I've made this week. This was one of my biggest days this month. This was one of my biggest days this month. I had long gold, I had long bonds, I had long equities, and I had long pound yen. Now, I know they're all connected. I know they're all potentially quadrupling my risk on the same trade, but they were all at different times, at different price areas. They were all confirming. They were all agreeing. Ultimately, it was a massive morning for me on trading. And that's all I'm looking for, is massive mornings or massive afternoons on a trade. So this trade was set up. I showed how the trade was set up last night. I showed how the trade setup was developing last night, how the trade idea, and I wanted to see if anybody knew what the hell I was talking about. And it turns out nobody did, which is really useful, because the fact that nobody knew how I came up with the numbers tells me that there's still a lot of information. Still a lot of information about how to play out on this as a narrative. And if there's a lot of information about how to play out this as a narrative, we can obviously start looking at this as a process, as a particular part of the process. In terms of structure, we've obviously got a lot of structures. And when we get a lot of structures falling into place as well, we can obviously recognize a couple of other things. We can recognize order flow in the right environment. We can recognize market structure in the right environment. We can recognize swings in the right environment. We can recognize the time of day in the right environment. The pound yen was a really interesting storyline. So we'll cover the pound yen in a little bit of detail today, because obviously some people still love Forex and we don't do an awful lot of Forex. So we'll probably do a bit more on that today as well as a narrative. Let's get through the data today, guys. We talked about Forex interest rates as well, or basic interest rates. So let's get through today's narrative as a storyline. As a storyline, we're obviously interested in what the Chessie is doing and how the Chessie is moving. That's part of our bigger background storyline narrative. So when we move into those types of things, we've got some stories to look at. But let's get through today's data. In terms of the calendar scheduled releases, of course, it's not the busiest morning session, but we've had some interest. We started out in the overnight session with some Aussie and Kiwi numbers, Aussie private capital numbers, building approvals, etc. Nothing particularly market moving. Coming into the London session, we were a bit light in terms of information as well. We had unemployment numbers coming out of Italy. We had Spanish CPI numbers coming in below expectations. And then, of course, we've got this afternoon, we've got some important numbers. Nothing particularly exciting, but obviously that GDP number always provides us with some interest. This is the preliminary GDP, of course, and it's expected to drop from 1.6% Q&Q to 1.2%. Unemployment claims also has this punch, 215,000 to 218,000. The GDP price index numbers, 3.1, in line with the prior of 3.1. That's going to be an important number, actually, because that is a price component of the GDP. And the price component of the GDP, of course, is the inflation component coming into the GDP itself. So that does have a fair degree of importance, and it's worthwhile you being careful with that number coming out at 1:30. Otherwise, we've got the pending home sales at 3 o'clock, down 1.1%, prior of 3.4. Gas storage numbers at 3:30. And obviously, for all the oil barons, and there's a lot of you, for all the oil barons, make sure we know about that oil number at 4 o'clock. Just as we go into classroom, we'll be spending more time on the oil before we get started in classroom, talking about those key levels. Remember those key levels. What does price do? It trades towards liquidity. So bear that in mind when you start watching those liquidity key levels, those commercial liquidity levels, not the inside market. There is no inside market on oil when it comes into the inventory release. It's all outside market stuff, right? It's got nothing to do with the inside stuff. We had a chat about order flow today as well. And I've seen some statistics. These are statistics from quant houses, for example, places like Citadel and, Two Sigma, these types of people. And some of the statistics that they have is that the short-term movement of price is about 99% related purely to one thing and one thing only, and that is the order flow. And I'm talking about the short term. And when they talk about short term, they're talking about the microsecond world, right? So you've got to bear that in mind when you see a statistic like that. In the microsecond world of short-term order flow, you're looking at markets that are moving approximately the storyline of order flow, approximately the swing narrative, approximately. So order flow to me is not necessarily a trade, but it can be a trade. But I like to fit my order flow because order flow happens on every single chart, every single candle, every single price point has order flow. But if the order flow fits in perfectly with my narrative, and order flow always fits in perfectly with a narrative because it's either bullish or bearish order flow. It's either trapped or it's not trapped. It's either easy money or it's difficult money. Every single narrative I look at in terms of order flow has an order flow narrative. Every single time I look at it from a fundamental has an order flow narrative. Every time I look at relative value has an order flow storyline. You can't get away from order flow. So on that basis, order flow really, really, really is massively important to us. We're either trading in a market that is everybody with us, or we're trading in a market where everybody's against us. The NASDAQ today, the big storyline on the NASDAQ today was a buy. And that big storyline on the NASDAQ today for a buy, well, it was a buy. The storyline was a buy. And we got a buy and we made a lot of monies. We made a lot of money. So when we get that storyline for a buy, we know that the order flow is massively bearish, and we want that order flow. So we know, I was surprised, I suppose, in some respects, that we actually got a lower low, but we did. And then we added structure. So when we look at the structure that took place in here, it turned out to be exactly the same structure that we taught in yesterday's classroom, exactly the same structure that we diagrammed in the tweets. And if you just look at this for a second here, this tiny little bit of action here, we go down, we go up, we go into a level 2 buy, and we go all the way back up to structure. And what we talked about was how important this point here is. The most important part of that whole storyline is that point right there. And then we set up a buy order here. Then we set up that buy limit order at the bottom. And then we go into that trade. Now, obviously, you don't have to use buy limits, but that's where the buy limit should be. If we're going to use a Heisman, if we're going to use a lean, it doesn't make any difference. The next trade then goes crazy. And we covered that in classroom. We'll cover it again in a lot of detail today when we talk about this trade. And we'll go through all the elements of how this trade just was so good. But look at that order flow. It is crazy how good that order flow is. Crazy. Anyway, welcome in, guys. I hope you're all good, ready to rock and roll.